Have you ever opened up a stock chart and wondered what are all these time frames that you see in front of you? Like you see the daily, you see the weekly, you see the hourly, and even seconds. And have you wondered what's the right frame for me? What should I be using to really trade? So today we'll decipher all of this and explain time frames for you in detail. So let's get started. So the common time frames you'll ever come across is the yearly, the monthly, weekly, daily, hourly, minutes, and seconds. And these are common. If you open up any technical chart, you will see these time frames do hover around. And what exactly are these and how should you rely on one time frame over the other? So before I explain this, I want to share a pro tip for you. So the pro tip goes by: you make your strategic decisions on the longer time frame and use one step down for precision timing your trades. So what I mean by that is, let's look at the common time frames again. If you trade the daily, use the hourly to enter a trade and exit your trade. If you trade the hourly, you then use the minute time frames to enter your trade and exit your trade. Now, if you trade the weekly, then use the daily to enter your trade and exit the trades. Okay, so that's simple, just step down one, and that's how you would enter and exit. But now let's explain what these time frames are so that you get a better picture of what these are. So yeah, I've deciphered this down into a table so to make it more simple and easier for you. So what I want you to do is focus on the chart time frames. And I've broken it down into different categories. So the first category that you see on your screen is the ultra long term. Now, these are for investors. These investors put in their money for 5 years and never take their money out. Now, a lot of these times, these investors don't really have to look at any charts because they don't plan on selling it tomorrow. So there's a small decline in the stocks. They don't really care about it. But if they have to look at one particular stock pattern or a chart, they would look at the yearly or the monthly time frame. So that's something for the investors, the long-term traders. Now, there is another category called long term, and you could have different genres in there depending on your trading style. But in the trading style where you trade long term, something that is used to define that is position trading. And a position trader is someone that would keep a trade or keep a stock with him from 1 year to 5 years. Now, the chart time patterns that these traders would use is the yearly, monthly, and weekly. And it all depends on when you want to exit or buy in your trade. But that's the average time frame that a trader that classifies himself as a position trader would keep. Now, if you're a long-term trend trader, so trend trading, it's a separate video to explain what that is. But if you know what trend trading is, the duration or the time frame that a typical trader would use is the daily and the weekly time frame. Now, again, if you're a swing trader, and a swing trader is someone that buys and sells on the swing. So if it goes up, the buyer would buy when it's going up the swing and then would sell as soon as it turns direction and goes down the swing. So a swing trader would again keep daily and weekly because they could have long swings and they could also have short swings that they're trying to buy and sell from. Now, a day trader by definition is someone that only trades or buys and sells within a day. And they would use the minute or the hourly time frames to time their trades in and out. Now, a scalper is someone that just buys and sells for a few minutes in duration. And they would use the seconds or the minutes to really define what time they should get in and what time they should get out. Now, the popular time frames based on what I just described, if you're a long-term, weekly time frames is a preferred approach for a lot of professional traders. If you're a short-term trader, 2 hours, 4 hours daily is something that you could look at. So what I mean by that is if you're looking at a particular chart, you would select the 2-hour time frame there, or a 4-hour time frame, or a daily time frame there. Now, if you're a daily trader, as I mentioned before, the 15 minutes or the 5-minute time frame would be an ideal time frame. And this is also a popular time frame that all the other day traders are using as well. So what that would do is that if you're looking at that time frame, you would be able to see changes in direction of the market that would reflect what the other traders are also doing. So that you'll see more consistency in how the other traders are trading with your trading approach as well. Now, if you're an overnight trader, and by overnight trader, the definition is someone that keeps their positions overnight. So you're kind of like a day trader, but you trade for maybe one more day or maybe 2 more days. And a common time frame that they would look at is a 60-minute time frame. And the last is the scalper, and a scalper is someone that would buy and sell, quickly, as I pointed out before. And their preferred time frame is the 2-minute time frame. So these are just typical popular time frames that other traders in the trading arena uses to make their trading decisions based on. Now, I'll just end with one more pro tip, and this pro tip is if the two nearest time frames don't align, and what I mean by that is if your daily time frame and the nearest time frame that you're trading with, so maybe that's the 4-hour time frame. So if your daily time frame and the 4-hour time frames don't align, wait until they do before placing your trade. So the basic rule in trading is to make sure that both your nearest time frames align so that you are getting more confirmation that your trade that you're placing is a good trade. So that's one of the fundamentals. You'll hear this from any trader that you come across, but not a lot of traders share this. So this is something, make a note in your notebook if you ever are trading or making a decision. Make sure that these two different time frames align. So with that, I hope you enjoyed a small detailed explanation of what these different time frames are, and maybe use this in your day-to-day trading as well. So with that, stay tuned for another video coming up very soon.